Asian stock markets declined on Monday after China reported a rise in new cases of its virus outbreak. The officials reported 3,062 new virus cases in the 24 hours through midnight Sunday. In an effort to cushion the blow from the disease, China's central bank promised additional lending to help companies against the blow of intensive controls that close shops, factories, and other businesses nationwide. The government promised tax cuts and subsidies to farmers, makers of medical supplies, and other companies. Meanwhile, shares in mainland China rose at the start of the week, recovering from their earlier slip, with the Shanghai Composite being up 0.51% to about 2,890.49. The index was lifted by the release of Chinese inflation data for January. Producer price index gained 0.1% in January, while consumer prices rose 5.4% year-on-year, higher than a 4.9% increase expected. In other indices, Hong Kong's Hang Seng Index slipped 0.7%. In Japan, the Nikkei 225 slipped 0.6% to close at 23,685.98, while South Korea's Kospi fell 0.49% to close at 2,201.07. Meanwhile, the S&P ASX 200 in Australia shed 0.14% to close at 7,012.50. Overall, the MSCI Asia ex-Japan Index was 0.39% lower. European markets saw a mixed performance on Monday as investors were largely cautious amid lingering worries about the coronavirus outbreak and its impact on the global economy. The pan-European stock 600 edged up 0.07%, the UK's FTSE 100 declined 0.27%, France's CAC 40 ended down 0.23%, and Germany's DAX declined 0.15%. Investors also kept an eye on political developments in Ireland, where Prime Minister Leo Varadkar was re-elected by a narrow margin as a member of the lower house of the Irish Parliament in the country's general election. On the data front, the French economy is set to grow 0.3% in the first quarter of 2020, the Bank of France predicted in its report. In the fourth quarter of 2019, gross domestic product unexpectedly decreased 0.1% from the previous quarter. Eurozone investor sentiment index dropped to 5.2 from 7.6 in December, the research institute Centix reported. The investor sentiment index for Germany fell 2.1 points. In the U.S., the Nasdaq Composite and S&P 500 clinched closing records on Monday as investors took heart in mostly solid U.S. fourth quarter corporate earnings. The Dow Jones Industrial Average rose 0.6% to end at 29,276.82. The S&P 500 index advanced 0.7%, ending at 3,352.09. The Nasdaq Composite added 1.1% to finish at 9,628.39. Investors shrugged off the news that the Director General of the World Health Organization warned Sunday that countries outside of China should be prepared for the spread of the coronavirus to accelerate. In currency, the dollar was mostly higher against major counterparts. The euro-US dollar registered the sixth day of losses in a row and dipped to fresh 4-month lows around 1.0900 as the selling pressure surrounding the common currency intensified. Despite the oversold conditions, the euro could extend losses in the short term of the dollar's day's bid. Now, focus shifts to the Fed Chairman Powell, who is to speak to Congress Tuesday and Wednesday. The pair may also take cues from the European Central Bank head Christine Lagarde's appearance at the European Parliament in Strasbourg. Meanwhile, oil prices struggled to switch into a recovery mode and dipped to fresh late 2018 lows around $53. Further declines were due to the reports that Russia and Saudi Arabia were at odds over how to adjust supplies in the wake of the negative demand shock. While Saudi Arabia and its Gulf Arab allies are seeking production cuts to the tune of 600,000 barrels per day, Russia has yet to endorse the recommendations. Russia and OPEC members are expected to meet later this week to discuss potential market balancing measures. Commodity prices are also being pressured by a resurgent US dollar. Besides, the rapidly spreading coronavirus dampens the demand for outlook for oil's biggest consumer market. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.